Hi guys, my name is Oladapo, as some of you already know, and in this very video I'm going to be taking you through profit making arc for 2024. I know some of us have started trading already, but if you want to stay profitable in trading this year, five basic things amidst several other things that I will be doing, and then I believe you will likewise be doing throughout the year. But these very five things, don't get it wrong. The moment you get it wrong, you might literally be having a very rough year in your trading journey. So at the end of this very video, I'm going to be doing a top-down analysis on the buyers on GBP USD moving forward for literally the rest of the year, and then what we should be looking at. And I'm going to be having a part 2 of this. In the part 2, I'll continue with the analysis of US 30, gold, and the BTC. So let's dive straight into it. Profit making arc for 2023. You can see rightly on my screen, I have these on color. Okay, let me put it on color red. Yeah, you can see the first thing I kept here. If you want to stay profitable in the year 2024, you must minimize your trading options. As we can see in our trading panel, we have several pairs like GBP USD. You put JPY, you will see pairs. There are a lot of things to trade. If you see GBP, JPY, there are a lot of pairs, right, to trade. But as a smart trader, you want to minimize your option. Like my goal this year, all the pairs I'm trading is to try US 30, GBP USD, as I've mentioned earlier, gold, and BTC. Why did I choose these four setups? These are setups I've mastered over time and I've really understood how they move. One of the things that will make you successful in trading is knowing your trading history. You can see this trade had moved from here to this region and thereafter continue again and pull back to the downside. This trade already have an history here. So it means that any time in the future, this very trade pulls to this region, there will be a reaction. So imagine you're trading like 10 different pairs. It means you will be lost in between. You won't even know, as much as some of us are familiar with some of the history, but it's not compared to you trading a particular pair and you already know those psychological level you're watching out for. So that's one thing I want to let you know. You must minimize your trading option. And why did I choose GBP USD US 30? I choose GBP USD US 30 for my conservative trade. These are trades that no matter what the market is doing, they are friendly to some extent. They are not aggressively moving. If they want to move, they maintain those direction for the while and the likes. Can see US, GBP USD. Let's look at US 30 likewise. US 30, US 30, done. US 30, okay, Dow Jones. You can see this pair, for instance, now, US 30. On this setup, you can see that this market has been breaking out. This is a monthly time frame anyway. So you can see that this market has been breaking out and overall buyers have been buy and buy and buy. So I already know it's a buy on the long run. So what I'm watching out for is more of a pullback. As much as traders are looking to retrace these setups, you look for pullbacks to continue the buy or whatever we will be analyzing. That will be more of a part of the session. But let's go back to the very first part. Okay, I said GBP USD US 30. Why did I choose these two? I said I'm choosing them for my conservative trade because I know they are always friendly. Then gold and BTC, we all know that they are very volatile. So they are more for aggressive sessions. So I know when they are ready to move, they moves in volume. So I already have my portfolio planned. So, and I've already done most of my top-down analysis for these four pairs for the year. So anything that is making them go against my analysis, I want to know what's going on. Is there a news? Is there an update? So I just minimize my options to these four basic pairs. And one beautiful thing about these very four basic pairs is because just like I'm a Nigerian, GBP USD, GBP, it's traded in the British nation. USD is in America, North America, and the like. So we know that in Nigeria, London session often open in the morning, and US dollar, New York session open in the afternoon, and I have the whole 24 hours to find opportunity in this pair. US 30 likewise, as we know, New York session will be during the day, Gold, one of the most traded in the market. Likewise, BTC for breakouts and all those setups. And one of the reason most of my strategy for BTC is mostly for weekends when markets are closed for GBP, USD, US30, gold. So most of my weekend I'll be doing more BTC. So if you want to get the best setups for the weekends, might possibly be dropping updates subsequently or even buyers for the week. But mostly during the week, I'm going to focus my attention on gold, US30, USD. So when market is closed and see I have the time to trade, then I go to BTC. You can see how I minimize my option. I already know what I'm looking and watching out for in the market. So likewise, the second thing you should closely pay attention to, let me change this color again. The second thing you should closely pay attention to is the use of proper risk to reward ratio. The truth is, if you want to stay longer in the market, you must not over leverage. As much as they are aggressive, if you want to go aggressive, have at least a percentage of your portfolio, if it's just 30% to be flipping. But don't use majority. And while flipping, you should also still follow proper risk reward management because you must know how much you want to lose. That's what my next point will be talking more about. So you must proper risk to reward if you want to stay up in the game because it's better you get in the morning bit by bit than you over leverage. You won't double your account in a day. There's a higher possibility that you'll be under pressure because trades trades doesn't work that way. And the second thing I was thought, excuse me, the third thing I want to mention is the part of you not having a profit target. Don't give yourself a profit target. uh, Get, but rather give yourself. This was meant to be rather give yourself a lost target. What do I mean by giving yourself a lost target? Meaning, if you have $100, you should know the worst that market should go against you to secure that money. If you have $100 and you've lost, possibly you lose like $10 of it, you still have 90% of that money to trade back. But the moment you give yourself a profit target, what profit does for you is profit makes you hold position that you're not meant to hold to the extent that you won't even know when to close. Do a proper trade management. When you profit has gotten to your target, close it. You're happy, you have a running good day, that you have a good trade that run all through and you are profitable to fine. But don't set the target for yourself. That's where pressure comes in. It affects your psychology because some people already told themselves they must make $50 every day on their $1,000 account. So the day that they've not made that money, they are not comfortable to the extent that they will start losing. That's why I say I have a losing target rather than a profit target. You already know that, okay, fine. Because you have that at mind, when buy market direct against me to this direction, I close my position. Because when you have a profit target and you've not met it, sometimes you might just have like maybe you have a $50 profit target, you met just $10 in the day, and the pressure in the market, maybe market came and take another portion. Because you are trying to make those targets, you will tend to lose more. But when you have a losing target, on the long run, when you're in a profit run, you just close. You already know what the market gives me. I'm out. Shift your stop loss back to entry where market is going in your favor. If you pull you back again, then find a way to reanalyze again. Remember, we're looking at what can make your trading journey more safer this year. It's better your $100, I said, reduce to $90 and still have $90 to trade than you to be having a profit target. And because of that profit target, you tend to even lose more while you're trying to meet up those targets. So I'm not saying you should be conscious of more of losing trade, but what I'm saying is if your mind is programmed that way, you already know when I lose 10% of my account, for instance, one of my trading plan, I lose 10% of my account. I had to wait and reanalyze. So I did again, I still lose another 10%, then I had to take a break for like at least 4 hours and come and see if I still want to trade for the day. Or I just take that whole day break. You must. Dollar is expensive now. So those of us in Nigeria, you can't afford to blow the accounts completely. It's better to take part of it and then grow back. So let's move further. So the next thing is don't over trade. So you don't lose focus. Over trading helps to lose focus. You have targets for yourself, like I said earlier. target to make you want to overtrade. You don't want to do that. Whenever you have a losing trade at least twice in a row, and you try again third time, in short, twice in a row, you should know that you just have to take a break. Possibly that chart is not ready to move, or something is wrong somewhere. You have maybe expectations, and because you want to meet them, you are just losing your main focus on the trades you should be picking. So you must learn not to overtrade. And the last thing I'll be saying as a roundup this very session, and quickly take an analysis on our GBP USD, is make sure you withdraw your profit. Make sure you withdraw your profit. You are in this market because of the profit. So when they give you profit, profit. When the market gives you profit, have a withdrawing strategy to always withdraw. Because one thing about profit making is, if you are not careful, you will keep accumulating it, and you don't know when you start increasing your lot size, and that which you've made, you are even losing it. At least for a day, if you make profit, before you can change your lot size, use it like part of what I do. Before I increase my lot size or take a decision for the day, I make sure that I've withdrawn the profit for the day. Then the following day, or if I want to keep my profit, I maintain the same lot size for the whole day. Then the following day, I can now re-strategize. Okay, what lot size should I use for the day? Have a lot size you want to maintain for the day, so that your profit can be consistent. And when you make the profit, you withdraw it. But if you want to retain, just know that the other day there's no profit, the accounts have a proportion. I have a withdrawing strategy. And I wish you all the best. So quickly, I also want to do a quick top-down analysis on GBP USD and expectation moving forward. So I like to do check from the highest time frame. So I said I will continue for US30, gold, and BTC in the part 2 of this profitable arc in my when it comes to minimizing trade options and the trades I'll be looking for the year. So let's try and go to like 6 months. On this 6 month, we can see the market started breaking out from this end to this end, and all of a sudden it has been correcting itself since then. See where it was now until where we are presently. Like for the past 6 months, from this very candle, you can see that this last candle GBPS has been selling, so meaning that overall buyer should be more on the sell. So when we now come down to like a monthly candle, doing top-down analysis, a monthly candle, let me take this guys off. We don't need them. Okay, let me take off these guys, and this guy. Okay, so when we go down to our monthly time frame, where we can see things clearly, you can see from this monthly time frame that since we've said in 6 months it is selling, so market has been selling since then, maintaining this very trend when it started selling. I'm looking at what this means for those of us mostly retail trader. They already know that this is a confirmation for a buy. This is a confirmation for a buy. So on the monthly time frame, what we are seeing now, it's a break of structure on the trend, and they were waiting for the pullback. The pullback wasn't going to take away this low, but for it to have fulfilled it, that means we wouldn't still be open for an adjustment. If had it been this trade pullback and did not break the previous low, then we know that it's a pullback in a trend and a break of structure to the upside. But because this happened, it was meant to hold the trend. It broke and continued selling below, just like the 6 month that confirmed. That's still open for itself. So our trend line officially is this. The only time you should be open for a buy moving forward is whenever this trend line had been broken. In as much it isn't broken, you are still open for a sell. So let's take it down to our daily time frame. I'm going back down to it. Okay, let's even pick the weekly time frame, seeing their bias for the year on GBP USD. Weekly time frame, we can see on our weekly time frame that looking at what is happening here, we are still open for a sell, pull back. Market has still been respecting the trend and selling up, so we're still open for a sell. So if you're trading this pair now, you would have possibly done something like this by now, connected this very trend to this trend by now, and see what will happen. This is a form of symmetric triangle presently playing out. Whichever direction this market break out to is our overall direction. That's been said. So let's go down to our daily time frame and see what the daily candle is telling us. So going by the daily time frame, we can still see from what we've gotten from the weekly time frame, which has given us the direction that market is trying to find direction. Daily time frame is in a range. As much as we've been seeing the clarity from higher time frame, daily time frame is presently in a range. So a smart trader will be waiting more for a break of structure before taking decision. You can see that this market has been in this region for a while. So the best way to pick this trade is whenever market breaks out to the downside for more sell, whenever it breaks out to the upside for more buy. Looking at this very psychological triangle that we drew from the monthly time frame, you know that the moment market breaks out of that, it's still a confirmation. You just wait for a pullback for a continuation. So that's why whenever market breaks out, some traders will be shorting it down again because that's still open for a sell. Your buy is only confirmed whenever market pull back to the trend for a break to the upside. So we've confirmed that GBP USD is still in a range. So what that means is because the market is in a range, you'll be looking for a buy whenever it gets to the obvious support to pull back to the resistance region, immediate resistance. That's when you go down to like your 4 hours time frame. Now we can see that clearly. In our 4 hour time frame, you can see this chart is so clear. So someone that picked buy here would have made profit to the obvious resistance, pick the same thing and all. But there are several confluence to add on the long run, which if you watch some of my video, you understand I'm always a fan of not trading the range. So as far as GBP USD is concerned, I am not taking most of the position for now because the direction is not clear. So I'll talk about the 3 other pairs like US30 as direction, gold and BTC in my subsequent video. It's nice having you stay to the end. If you're able to do that, do well to subscribe to this very channel. Do well to follow our subsequent content. We have a lot of resourceful content for you to grow as a trader. And then you'll see in the bio somewhere where we have our recommended broker, which would help you really have a successful trading journey. I wish you all the best. See you in the next.